Yo, what's up, PumpTown and friends? Hope you're all doing great. Welcome back. Hope you had a great weekend. Oh, get the heck out of Bitcoin. Yuck, what are you doing in there, dude? Ew. Ew. No, I'm just kidding. So, what do we got going on here? I hope you all had a great, relaxing weekend. Maybe you were doing some back testing. Maybe you just enjoyed your life, which is great too, being a good little trader. That's what you do when you're trading. You just enjoy your life. You work for like, I don't know, 20 minutes, sometimes maybe a few hours, and then you're done. That's it. Your day's over. Go and mow the lawn. Clean your garage. Do those things that you have in the back of your mind. Just get them done. All those things, your dirty garage, your yard, spring cleaning, it helps when it's all done and you feel free at your work desk. Shout out Ray Villa, what's up? Welcome. Well, holy moly. We have got quite the mess in here. But it's so perfect. Why is the mess so perfect? I don't know. It's probably random. So what do we got? Well, look, if I was turbo bearish and I was looking for that low to get taken, or at least half of this wick, maybe this gap right there. If I was bearish, this would be it. That would be what I'd be targeting here. And we've got a shift in structure here with a fair value gap on a monthly time frame, you guys. So, yikes. This would typically mean we are turbo going down. However, if order flow is bullish, you know that's not the case. People are like, how do you know which gap to use? How do you know which PD rate to use? Well, what's available to you right now? What's the closest thing that's available to you? Here is a fair value gap. Okay, so let's look left. And we got to include the top of that candle there because there's an imbalance here. Okay, so look left. What is this? A mitigation block. So label that off. Oops. All right. And we also have this gap here. It's a little bit higher. However, it lands pretty dang center with the fair value gap. So I like that level. Okay, so we got to get the open of this candle. 68325. Looking left. Or sorry, right? 6-8. Yeah, that's it. That's the open. So this is a bearish candle. Don't let it trick you, because look at big gap here. Is that the open or is that the open? Oh, I don't know. Let's check it out. Open 62950. So this is, wow. See what I mean? Watch this. You go to the open value there, and it says 19,629.50. Okay, that's the open. Perfect. So that's our gap right there. And you could even like include that here. So we're inside of this gap right now. And if you've noticed that we've been in a little bit of sticky price action in here, I would blame this gap right here. So I like this setup. I'm going to label this one. And I want it red because, well, I actually want it blue. And the reason why is because I'm bullish. And I would like to see our bearish PD arrays blasted with bullish order flow. That's going to take a bit for you to understand if you're new here. And, well, even if you're not. But, yeah. It's just the way it is. How do you know when your model's going to fail? If I was bearish, this would be a bearish model. Like perfect, actually. If it came up to consequent encroachment of the fair value gap, I would expect to see some sensitivity back to the downside. But because I'm bullish primarily, I want to see price rip through this violently. It's balanced in here. Well, you go to the smaller time frames to see what I mean. right in here is balanced. So from this candle's low to this candle's high, this is a balanced price range. So when and if we do get back up into this gap here, I would expect to see some strong maneuvers. Now I've pulled those gaps from the monthly time frame, so I'm gonna see if I can refine them in the weekly. So you see how there's like a bigger gap here. There's this little guy down here. Basically, this whole thing's a gap too. But still providing some nice support. So we got our order block, sweet, launching up, sweet. So that mitigation block that's here, that's the one in the monthly. So I'm going to refine that here in the weekly and pull from this down close candle here, because this would be the breaker. So now that I got that on there, I'm going to grab the body, drag it over. Now I want to see this blasted through. So I'm going to paint it blue. Really, it's this whole up close candle here, but I'm primarily wanting to close a candle on a, 2 hour, 4 hour daily basis above that midway point there. Yeah, so grabbing our range from here to here, obviously we're in a premium. So if I grab the whole dealer's range from there to there, split it in half, what do we got? That's not it. That one. Yeah. So this is equilibrium of that big, huge range to the downside. Now this is in the weekly time frame. This is our dealer's range in the weekly time frame. So it's like we're in a premium for sure. Premium sell here, buy side liquidity pool, obviously just underneath our premium arrays here. So for the week, depending on how we open and what happens in Monday at midnight, we'll know more later. Maybe I'll do another update later. But just for now, this is how I see it. I want to see the first week at least. If we're in like medium bullish mode, I'd like to see this week trade down, obviously. If we're in turbo mode, I just want to see it start losing control. And really, the markets are running out of time. Like, they got objectives to meet before certain date objectives are to be met. Like, you know what I mean? Like, it's running out of time. There's some fun sloshing around in the back room, basically, and it's not been deployed yet. We're waiting for it. How do you know, Master Friend? Because we're at these prices. So taking that whole dealer's range here, I'm going to grab that and just kind of take a peek at what happened in here last week. We had a premium come down to a discount, snapped up through the range aggressively. So now I'm not trying to call tops here. I'm just going to extend the range a bit. So yeah, so now because I'm in the daily time frame, now I'm going to rely on IPTA. Because it's not obvious. Does it want to just keep blasting off, use this midway point as support, and just keep going? This is the game we play when we get into turbo price mode. Now there is this here. I was actually looking for this for non-farm. It's just, okay, fine, leave it then. I've seen gaps left open for years, so I wouldn't, it's not like we have to go revisit it and balance it before we leave. So I'm looking at this bear flag and the stage 2 distribution in here, and I'm going, okay, that's obvious bait. So maybe it comes up, doesn't tag the buy stops just a little bit, and then trades down, gets everybody hooked on selling pressure, and then ram it. So our Fed folders are on Monday and Thursday, basically, and we got FOMC on Wednesday. So if you don't know the drill, no model, no play, first of all, right? Just make sure your Judases are timed correctly, and it's pretty hard to lose. Like, if you're losing badly, it's because you just can't get a hold of yourself, basically. Remember, you got to know what you're being patient for. And when I give you these levels to put on your chart, you'll see how price just bounces from one of these levels to the other. It's I mean, if I was getting it wrong consistently, I'd probably disappear. So I'm just kind of wondering, do we tag these buy stops before we trade down? And how far do we trade down? It's tough to say. So tonight's Asian range will give us a lot of clues. Okay, mind that. Don't trade it. Study it. And then London session will give us a good idea. I'll likely be live for FOMC. So that'll be my live day. Maybe tomorrow we'll see what happens. Yo, what's up, Lid Glass? What's up, everybody? Yeah, cool. Well, God bless you all. Thank you all for joining. I hope you all have a safe, relaxing trading week. Don't do anything I wouldn't do. And just stay updated for the new obvious levels when they show up. Peace out.